Good afternoon, everybody. I'm Dan Hussey from Zaner Ag Hedge, bringing you a Strategy of the Day update here for February 16th, 2022. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. With that being said, we've had quite the rally here of the last 24 hours. Recovery in both row crops really being led here by the soybeans being up 35.5 cents there in the May. With the March leading the way at 36.25 in the bean complex. Meal was very strong today. Oil also strong, both closing positively, shaking off that disappointing NOPA crush report from earlier this week, and now opening the door to what looks like a retest of resistance now that support has proven itself across the soy complex there. Corn markets responding positively here to the oil rally we've seen in the last 24 hours in the recovery from that sell-off we saw yesterday. Oil, big volatile moves warrant big volatility and pullbacks of this magnitude. So, be aware that that is also a driving factor, and that volatility might actually be a negative in the near term for corn. And I'm not just saying that. And there's volatility in both directions, right? For crude, corn might be unwilling to commit until crude is. And this type of volatility can be a signal of a top, but we are going to look at the crude chart here, a daily chart, and maybe the 4-hour just briefly, kind of go over the trend there because it is, I think, going to play a major role over the next 6 months in the political cycle as this administration has run out of a lot of strings to pull, and they are getting fingers pointed left and right about the price of gasoline. That happens to be a seems to be a very touchy subject with the White House right now, and I happen to think that there is one card left to play here, but it would require an EPA walk back on regulations and reinstating some blending mandates that we have otherwise seen kind of just fall to the hands of big oil as of late. So the last card the administration has to play: can't release any more reserves, didn't do anything, and removing an 18-cent federal tax is peanuts. It's chump change compared to the price of gasoline these days. So the next biggest, I think, and best way and easiest solution is unleash the biofuel wave on the market and allow more blending and help curb the gasoline price here. All right, so I've got the chart up of May soybeans. I am shifting focus from my March contracts into May now. May beans, pretty long period of consolidation there for better half of 2021 while we found our way into the new crop. Then once new crop became old crop here to start this year off, we've had a very similar rally to what we had last year this time, a big extended rally all the way through June. That might have put in a footing here. Beans in the teens started this crop year off in terms of our pricing into this acreage for this year. So I think we can all be thankful for that, given the input costs and other stresses with production right now. This high price at this time is at least warranting going after those acres here come the springtime. I think we'd all like to see corn a little bit higher still, just given the input costs and maybe that some have locked in. And I do think it will get there, and we'll take a look at May corn in a second. But May soybeans here, the supportive area that we could have come down and tested, we didn't. Was down here at this 18-day moving average, also the old support from last week. We filled the gap here over the last couple days, held that area of support, held that congestion zone from last week as support. In other words, are turning this what could have been like a reversal structure here, this rally here today, turns it into a bit of a bear trap. A lot of traders might have looked at this as a start of an island reversal, gap up, bad nasty tail, and then a reversal down. Well, if we go below 1546, I think they will get a slide. Probably test that 18-day moving average. Lots of support below us. 1500 is going to be a big psychological level too. But today's reaction, unless it's absolutely completely reversed tomorrow, I do think that this is the start of another higher and otherwise part of an otherwise uptrend that's taking us to $17 to $18 in soybeans through this June. We've been talking about how the narrative now needs to shift. War premiums that were baked into the cake were obviously taken out of the market. So where you see prices now, I think regardless of what happens in Russia, this is what we're looking at. We all should put Russia and the Ukraine out of our mind. It was a non-event, and the media was once again, I think, guilty of fanning the flames of fear in many ways. And it doesn't. And I do think that there is an element of trying to find a scapegoat for the rising cost of commodities right now and the price of oil. If this is politically, if we could point our finger at the rising price of oil for another reason, maybe, just maybe, there would be less political tension around the price today. All right, moving forward here into the smaller time frame, let's look at that 4-hour chart for soybeans. So I do want to keep this video a little, shorter today because it is really a intro to what we'll cover in more detail tomorrow. Soybeans today didn't get as low. I was hoping we get down to 1530 in the May. Test that channel support as well as the 50% fib that I have drawn up there. We still could if we rally up above 16. We don't break out of 16 with authority and really go through and up to test contract highs. If we start to roll over after just a minimal break of 16 and fall back below 5.8, 1580, 1560 and down, that would make for a bigger three-wave move down that could take us down to that 1520 to 1500 area. I'd be ready for it if we got there to be, to take some action, maybe get some reownership going. But generally speaking, I think I think that we would be left wishing and wanting for that pullback. That would make it too easy to get in and to buy at a better price. I think this market might be getting legs to now run, do a short squeeze above 1600 and extend towards 1680 to 1700 at this time. Maybe 1675 conservatively from where you could project, just upside momentum would take us. So tomorrow we're going to see, into tomorrow, we're going to be talking about the $16 threshold. Do we break above? Are we staying there? Do we warrant a test of that contract high? And if so, we're in uncharted territory, and I would not, you would be very, very obstinate to try to step in front of this market and be a short and pick a top at this time, given the fundamentals, given the export markets, and just generally the inflation trade that's going on. There's so many things working against row crops going down at this point. Okay, so that kind of wraps the beans. I know there wasn't much to sink our teeth in there. This 50% short off the high that we traded up into today was the level I wanted to, kind of point out. It's a level I intend to see breaking. We broke above the trend line resistance. This does feel like the start of another impulse or wave higher, and it's coming from at least a supportive area on the chart. Although be it not my measured technical levels, that doesn't matter. The market doesn't ask me where I think support's going to be before going. I'm here to identify where the market tells me support is, to then try to react to it as quickly as possible, get the best position as close to it as possible if I want to be in it, before the market goes. So watching that closely here today, we did curb back on some client positions and stuff into the end of the day. I was working with some guys to get out here towards the end of the day to take profits. We can relook at getting into tonight. Let's go down to the 15-minute time frame. I did intend to do this. The short time frame, the full 50% pullback could take you down to 1570. I'm more inclined to say that yesterday's high at 1580 will probably be the supportive area. So 1580 to 1575, I'd be a buyer on the beans here in the overnight for a push towards 1600 or above here tonight. Now, we could gap up, go higher on the open. We'll see. But that's what we'll be able to cover that tomorrow in a little more detail and talk about some ideas that we can maybe hop in on and actually take advantage of there. And we might start, because we have been talking a lot about longs in the past and how to position for all of this move, we might start talking about how to protect some of that stuff tomorrow. We'll also quickly look over tomorrow at 1:30 Central Standard Time. I do the Strategy of the Week update for those that are unaware, where I look through actionable trading ideas that we can take part in the options market, in the futures, how to manage risk on some of these ideas. If we're in, theoretically, if we're in a position here or here, what would you do to manage it? All that kind of more trading mentality idea. So I wanted to point out here, though, on the old crop, new crop July node spread that we will cover in way more detail tomorrow. We have broken above the old contract, old highs from last May here at that 127 area. This is on, again, 22 July node beans. Last year, this spread went to almost $3 wide. I think 280 it might have popped out at. I need to double check that. But if that's the case, we got $1.50 just to go to get to where that spread was last year. Meaning that that is going to translate to a move in our outright futures, and it's going to continue to show that like we saw today in the charts, that November is probably going to lag in this inverted market that is very indicative of tight supplies and strong demand that we're seeing drive price action right now. All right, May corn, July These corn we'll look at tomorrow too. It's breaking above some levels, are really actually there. What the heck? Well, I got the chart up and it's on the tip of my tongue. Let's just take a quick look. We're fighting to break this trend line here, to break above 56 cents over, 60 cents over. That would open the door to the old range that was basically 60 to, let's call it 120. The next 50 to 60 cents higher in that spread. So while I'm bullish above, bearish below this 40 cents over, I do think we're going to pressure through here. And if we start to see that inversion come in, we're expecting, I will expect July corn here to probably continue inverted towards and continue towards in backwardation towards that $1 over figure. All right, so now May corn. Looking at our daily chart here, pretty impressive recovery. That 18-day moving average is creeping up now above our gap fill. I like seeing that in terms of a level to continue to offer support, because now it means that the gap fill has a much lower chance, in my opinion, of filling. If we get follow through the 635 lows of today, okay, I think the next level is that gap fill and trendline support down around 616, which also happens to be where this 55-day moving average at 608 is. So we'll see if that happens. Notice the 100-day moving average here and the 200-day came very close to a bearish crossover, but bounced off each other. Corn is in a proverbial trend higher. The new contract highs, it's just a matter, in my opinion, of where do we find support. And I do think corn will generally stay above 620 on any kind of deep pullback, but we'll see. $6 is probably a little bit out of striking point at this point in time. And this is all assuming, of course, that the price of oil continues higher and the demand for ethanol and certainly acres here for corn into the springtime continues with its fight. So that kind of leaves me with a segue that before we go into the corn smaller time frame chart, let's take a look at the daily chart of crude oil. We've come up off of major supportive levels from the 65 area when we had a major pullback there in December and towards the end of the year. We've now rallied up to the 93 to 95, negative 23.6% retracements. Very clear trendline support against the lows that we held here. We've had a series of kind of pennants that just have kept breaking out higher. And it seems to me that between 91, 92, and 95, 96 now, we're setting up in another one of these kind of pennant-like range structures that so long as we generally remain above today's low and yesterday's low, I think we probably will see crude oil resolve for higher still and continue this channel higher. And if it really does want to continue to break out from this last pullback to the 65 area, that supported 50% area, you can see on the chart here, and old trend line, no resistance here. This yellow line broken, now support. The next extension up could take it to the 100 to 110 area. So yeah, look out. But while crude remains bullish like this, I find it hard to believe row crops are falling, particularly our biodiesel, corn and wheat, our beans, excuse me, and expecting those to ethanol and biodiesel, expecting those to continue to drive price action as well, that energy market. All right. Now let's break down that corn 4-hour chart for us. I could consider this a completed three-way structure down into 50% retracements at 635 for the month. That would mean that the swing higher for corn is probably going to take us to 670 at negative 23.6% retracement. We'll confirm that with a break above today's high, yesterday's high, and of course this 650 trendline resistance, in my opinion. If we do head a little lower, that open gap at 622 could easily be a level the market wants to try to trade. It's old, there's old highs here. Also the old 620 to 610 supportive area. That would be my next area of interest, 620 to 610 on this market if we start to roll over and go below lows of today. But while we're holding them, I am expecting us to put more pressure on this 50% short off the high. The 660 high to the 635 low, 647, we're seeing a similar level in the soybeans. Both those levels we want to see break here. A move above 650 would tag that negative 61.8 line and suggest that the bears don't have complete control of the trend and are turning the market lower. So the 15-minute time frame here today, not much to talk about other than early in the day. There was, right after the bell, there was a little 50% pullback on the day from low to high. That 50% pullback took the swing up to negative 23%. We actually held the extended long high to high here into the end of the day. Might go up to 48 in the after hours, but full 50% short off the highs. Look for 640 to be a a supportive area. But you know, the way corn and beans have been moving lately, if we're going higher through today, we'll probably continue higher without much of a pullback. I'm not suggesting you chase the market here. I'm warning that that if the trend higher continues, we're at a point in it where it's probably going to be rather explosive and rip the face off, if you will, a rip your face off rally for the shorts. So, all right, that wraps up my strategy of the day here today. I hope you guys all liked it. Shoot your likes and your comments in the section below. Feel free to sign up for our strategy of the day or strategy of the week webinar, held every Thursday at 1:30 p.m. Central. So tomorrow at 1:30 after the close, you can sign up for that webinar link in the comment section and in the information section of this video. You can also sign up in the links below to receive our free Zaner Daily newsletter to our entire team's commentary on current market conditions. And of course, you know, can be reached over here at Zaner 312-277-0110. Find me on Twitter, Facebook, and Hussey@zaner.com. Have a great day, everybody. We'll be back with you tomorrow and as price action develops. Take care, everyone.